What's going on, fellas? So, exactly what happened with NVIDIA has exactly what we thought would happen happened, right? Um, Big money always leaves a footprint, and they always leave a footprint that is able to be tracked. Because why? Because it takes a lot of time for them to unload all of the stronger hands inventory and then eventually the stronger hand flipping, a tape flip, essentially. It takes a lot of time for that to happen from a macro scale, right? It takes multiple attempts on liquidation and having the exit liquidity available to unload in larger size, right? And then those same participants will just rewash areas on the chart where they could get discounted entries at, right? Where they can get optimal fills at. Those being fills down here in the 95 as we saw in the August 5th lows over here with NVIDIA. And then they started developing some buy side structure right on top of that gap right here with a higher low. And then we continued with that buy side structure throughout most of your Q3, Q4 area, right? Now, whenever we get past, whenever we get into an area where the window of distribution gets a little bit more vulnerable for us as traders, that would be this one. That would be the December QQQ, like the quad witching for December, right? So you're getting all of these leaps expiring. You're getting a ton of long side directional bets within that December chain, as well as the January chain, but more on the equity side, right? So you guys got to think. Whenever all of that flow kind of rolls off the table and the flows to begin with aren't even really too strong, and as well as leading into inauguration, as well as just this being a major, major, major bubble, in my opinion. I think that this is just one big bubble, and that NVIDIA has been distributing ever since this footprint was left behind from institutions over here, followed by obviously lower highs, gross looking lower highs into that whole yen thing that happened. We fill the gap. We put in obviously some sort of crazy, crazy, crazy candle over here on the NASDAQ, right, with really heavy volume. So that was a signal to obviously lay off the short side. And then they start putting in higher lows subsequently. Now, you guys got to think here. This was distribution that started where obviously a big seller participant was in the name over here, right? And that led to a 3-day sell period followed by a lower high and then a drop into the gap. And this took a month. This took 31 trading days or 46 days total, right? And then we finally made new highs, okay? And those new highs took 54 days, right? So you guys got to think whenever sellers are playing passively from here, right? And then they maybe sell a little bit more aggressively and move the ass down just a couple points, okay? And then everything is absorbed on an internal basis, and then they send it for a new high. Sellers could, this same seller over here that was obviously participating up here in the 140s could obviously just reappear a little bit higher, right? And we actually got that signal through the earnings candle itself, right? An earnings candle is is a candle where and it brings a lot of volatility. It brings an opportunity for us to see really truly who has the strong hand. That's why pegs oftentimes will give us a directional read. That's why whenever you have really nasty shooting stars, where maybe you get a red to green. Or I'm sorry, a green to red move at the top of a trend. It could be a very clear indication that the trend is stalling a little bit and that we have obviously the flip side, uh, meaning sellers taking potential control, right? Obviously, that is all subject to change just through structure happening on the chart, right? But we had a very disgusting looking NVIDIA candle here, and it almost seemed like this candle was taking out the liquidity from this 3, 4, 5-day base that was sitting right here above this resistance. They put a daily wick on top of 150, and then they closed this as a very neutral based candle, right? But it had the heaviest volume that we've actually ever seen since down here in the low like 110s, right? So you guys got to think, right? We could obviously conclude that with this seller participant over here, that seller participant could also kind of be unloading his shares within this earnings day, right? And if you guys go into your hourly time frame and you guys take a look at the actual earnings price action, it really wasn't so bullish, right? I mean, we had a big time sell. As you guys could see on this 15, we had a big time sell, right? And then obviously that led to some sort of like short-term bounce that led into then lower highs, right? But bottom line is that we completely soaked the bottom of this, and then we broke that subsequently 2 days afterwards with absolutely no bid really anywhere. Nowhere did we have any sort of strong bid, right? And then we got a lower high, okay? So on your hourly or on your daily, you're kind of just seeing the continuation of sell side structure developing after we have a potential UTAD in store for us right now, right? So, or I'm sorry, not UTAD, UT, right? This is one of those candles where whenever you see it through the report, right, it has decent volume behind it, but it was basically a neutral spread candle that swept liquidity from the upper wick, and from the lower wick it was trying to hold the previous high. We can consider that basically neutral, right? But you have to monitor the days to come, the weeks to come, and just see what builds out here, right? And one notable thing that I saw with NVIDIA was a big time head and shoulders formulating here on our daily chart, yet there was absolutely no bid on this phase C leg that was leading us into our UTAD potential, right? We had a phase C leg after the undercut of this head and shoulders, right? So when we're talking about head and shoulders here, guys, this would be our head and shoulders. Here's your head. Let me take off the magnet. Here's your left shoulder. Here's your head. Here's your right shoulder. Everyone was looking at this liquidity beneath us at this support, right, and acting like this was going to break down. And yes, it was, but it was only going to break down for one last recollection from buyers at the bottom of this gap, as well as this critical daily / weekly level for us to then pivot off of it, see a little bit higher, take out the high, put in a UTAD now, which is an up thrust after distribution for the finalization of this whole entire change of hands potential in NVIDIA, right? So this was our UT that was sitting right over here. That's our initial up thrust, right? But it doesn't have enough fuel behind it. There's not enough of a change of hands occurring within the chart and through the volume that we could see here that leads us to believe that this is just going to crack through, break down on the head and shoulders, right? Flows were actually returning into the market, and we were getting into that leap expiration. We got a pop from OPEX on the leap expiration, and then NVIDIA actually digested the what's it called, the sell that happened afterwards on the mid candle of the FOMC over here. We had a mid candle FOMC in the FOMC bar lower high on the Nasdaq over here on December 26th, right? And as you guys can see, NVIDIA was kind of defending its pop and just kind of pushing its way a little bit lower into that discounted range before obviously getting its last leg higher, right? And then you guys could see how the relative strength was there for the time being, right? I mean, this was a sell period from December 26th all the way into January 2nd, and you go over to NVIDIA, December 26th, we were kind of holding up pretty well, and then we just sold off a little bit more into that discounted range, and then we started to hold it, as well as the OPEX candle high area. There was a lot of volume behind that, no volume afterwards, right? It was the holiday seasons, and then we finally got back above that high. However, that does not matter because it's just going to sweep out this area one more time to then put in the UTAD, and that's exactly what we got. And the reasoning as to why this wasn't the UTAD over here, guys, is just like I said, looking at the price action, looking at everything throughout this whole area. There's so much money, there's so much leverage that is built up within this name that you need to see a very, very alarming red flag about NVIDIA for you to obviously believe that this thing could crumble down into the gaps beneath us, right? Down into the low 100s or all the way down into like beneath this higher low, right? And that takes a lot of effort, right? From one side, that takes a lot of absorption, that takes a lot of legs to the upside that can be sold off of, right? It doesn't just happen with a major reversal in one quick little candle unless you get some sort of critical, huge headline about the company, right? And we don't have that. We had the AI event, we had our UT. There wasn't a ton of volume or any notable daily candle spread that told me, okay, yeah, this is totally distribution. But I knew that a seller was participating over here back whenever I was shorting NVIDIA literally like every day on the lower highs, every day throughout this range, all the way down into the gap, right? I knew there was a seller there, and I remember that tape, and I was like, yeah, this actually looks really disgusting as of right now, right? And then followed by that, we got some strong buyers from the lows, and then the buyers incrementally got weaker as we made the new highs on an internal structure basis, right? This was all just really weak, and this whole entire range here throughout most of December and November had absolutely no bid, right? There was no bid really involved that had a lot of strength anywhere throughout here. You actually had a lot of other semiconductors performing a little bit better and showing a little bit more of a strong structural chart rather than NVIDIA, right? NVIDIA looks like absolute shit to me. And yeah, so the UTAD was right into the event whenever the CEO was talking about the business and whatnot. And I don't even really like to pay attention to that kind of stuff because it does not matter at all with markets. It's one thing that you guys really got to understand. Another reasoning as to why I really do like kind of dispersion out of this name into some of these other names and just honestly into other sectors is just from it's more from a fundamental standpoint and more from like a standpoint of like the amount of liquidity injections we had into our market, as well as just this name has just never looked good ever since all the way over here on this day, on the October 31st, right? And then once I saw that last leg of continuation into the earnings candle, and then the drop in failure of this previous high off of the earnings, I was saying to myself, yeah, you know what, guys, this is really not the best chart, right? So it took out the high to literally a penny right after the report, and then they sold off everything in a very, very, very aggressive way right off of the open, right? That's a major red flag, right? So, yeah, everyone was really hyped up about this making like new highs, new all-time highs, and then everyone thought this would break through and go. That's just not the case, guys, with where we're at in the market, with how the OPEX windows are aligning, with how the inauguration is aligning, with how everything is aligning, and basically how this name just never really had a true strong buyer. And if you guys can identify that, it's going to help you out a lot in your trading, right? I've been calling this out for weeks. I really haven't even seen anyone else calling this one out on as far as like the UTAD goes, as far as not trusting this leg higher, as far as that I've known that this is distribution for a very long time. And that's just, looking at what I see. There's a lot of people that try to use like data on the dark pool, and they try to use like the flow, and they try to use a lot of this nonsense that means absolutely nothing in terms of the intentions behind if a bank wants to really aggressively unload at one given time, right? And as you guys know, the reference is always elevator up, or I'm sorry, staircase up, elevator down, right? That's always these names have unlimited liquidity essentially in terms of from the sell side, right? When you want to sell shares of NVIDIA, you're almost unlimited to the amount of counterparty liquidity that's available to you, right? And you even have more whenever it's off of an event like this, right? So they could do this in a very quick way. Yeah, this ties up really nicely with just the general tech market looking like pure distribution across so many different names. Apple was a really big one that I've been waiting for a very long time in terms of after this breakout level. We had a very extended trend higher on several ATR extensions, and it was basically just into an exhaustion top throughout the holidays. That led to now a very disgusting looking weekly chart, especially if we fail where the preliminary distribution was actually occurring from. So a lot of these charts could pull off something like this. NVIDIA could do the same as well if we start failing off of this level. There's so many different charts that have really disgusting looks. Netflix is another one on the daily chart that just looks terrible. extremely overextended. It looks like it has a rounding top. Preliminary distribution was actually happening on November 25th. So you guys can kind of see how a lot of these names are actually being front ran, aside from your strong pegs and whatnot that are a little bit harder to tell. You could see how a lot of the distribution gets front ran into a window of opportunity for obviously a sell-off to occur, right? And you could also see on the other end how the risk-off rotation actually makes sense in the energy sector and some of these other sectors that look pretty promising, right? I've been talking about this Oxy long for a very long time. We had an original floor that was established off of 49.75, right? And that's where the preliminary accumulation actually started from. Like I said, institutions, big banks, they always need to initially leave a footprint on what they're doing, right? It's always going to be available for us throughout the charts, and then they incrementally distribute on these large cap names, or they incrementally accumulate on them, right? It doesn't just happen in one go where, they press the bid and they get in with this crazy amount of a position, and they have to do it through lower lows on an accumulation and typically through higher highs on a distribution, right? And typically through events or just people, weeding people out, getting people to sell. And energy has been off of an absolute cliff leading into the December OPEX, actually. As you guys can see, this sell period that we had on Oxy leading right into December 20th, which was OPEX, was very crazy. And then as you guys could see, we had a really, really, really strong day actually for Oxy of almost plus 4% and 29 million volume traded. And if you guys look at your weekly chart, it just looks like one big weekly reversal bar with a volume anomaly here. On the week of OPEX, right? And we actually had that same general look. If you guys go over, and I've talked about this so many times, but if you guys go over into XLE, we also had that lower low accumulation look. A little bit different of structure, but it's still the lower low accumulation, right? That was actually into the January OPEX. But those are 2 times within the market in this general window from the end of the year into the new year. The new year brings new flows, but then we obviously get a lot of that open interest within that January chain where we can basically call as the risk on market where the bubble market was being driven last year, like AMD and whatnot. Kind of started to fall off after that expiration. We go over into Oxy now, and we have basically the same thing kind of going on here. A major support off of like the $50 psych, right? And we had like I said, our preliminary accumulation looks off of the weekly and daily chart that we could see actually in September, right? So there was a major buyer participant after we cracked this support up at 55.50. And then obviously that led into probably a little bit of buyer mitigation as there was a lot of bid activity happening down here at 55.50 on the previous base that we had throughout 2023, right? Leading into 2024 actually. So that was a massive support, right? And it almost bled through on little to no volume. And if you guys go into your daily chart, you could see how the volume profile actually really ramps up as we push back up into that level. Now, like I said, I mean, a lot of the times whenever you see these crazy pushes that have a lot of intention through the volume, you also have to understand that there's going to be a lot of profit takers and fearful buyers that want to get out of the name and start selling on the retest of where they previously bid at. And they might double down or triple down here to mitigate up into that area. And that could happen with these, right? But then we started to get the low volume pullback into that low once again, almost like this double bottom area that we have right here. And then that's whenever we started to get an absolutely disgusting base with volume anomalies everywhere, right? This was actually a red to green intraday session on the earnings itself. It actually printed us a daily hammer bar that has a lot of volume behind it, right? And then they started just creating this resistance beneath us, beneath the gap as well, right? So they left behind some gaps, and they just started creating this resistance beneath. Right off of here at 52, right? That we could never get a true strong daily candle closure above on. So that's what I'm actually looking at right now, and that's why I think that this is a path of least resistance where there's going to be a very big lack of supply off of that 52 area. And they're probably going to coil up the range, and then it's going to result in expansion through up into the 54 gap, right? But this was where buyers and the whole accumulation, the whole sell climax of this whole campaign started to leave a footprint, right? Now, typically what happens is they want things cheaper into windows that make sense, into windows that are very vulnerable in terms of looking for a rotation in the market to happen into, right? And that being, in my opinion, leading into the new year, leading into the inauguration, leading into January OPEX, right? Those are all kind of in that same general range where flows are going to kick in after the holidays, right? You have your last of that January flow leading into the January 17th expiration. And then once that's all off the table, that's just a really nice window in terms of finally looking for that whole markup in the risk-off market, right? And this is one of those risk-off names where it's like a safe haven, and each and every single new low, just like I talked about with ZOM this year, or XLE this year, was accumulated, right? As you guys can see, volume anomalies throughout most of this area, right? And it was a 3 lower low accumulation into a major imbalanced weekly candle, right? This is one huge body on a weekly bar right here, guys. And this is all perfectly aligning with an NVIDIA UTAD after a UT, right? UTAD into the investor meeting. After they talk about, you know, all the not so smart people believe all of that and think it's going to send a stock higher. Meanwhile, that's not how it works. But yeah, guys, I mean, this was just a beautiful 3 lower low sell climax. Their footprint was initially created at the end of September, right? And then that continuously happened throughout November. And then that was obviously finalized throughout this volume anomaly that led us right into that major index leap expiration chain, right? And all of those flows knocked off the table. That is the mother OPEX. That's what I like to call it, the mother OPEX. The OPEX of OPEXs is what I like to call that, right? And it can spark a new rotation relatively quick, right? So I did this last year, or I'm sorry, well, yeah, last year now. In 2024, and now this year it's looking almost like the same general pattern, right? And then obviously, like I said, guys, this is a massive volume candle, right? Typically, whenever you don't have enough demand in a general area, it's got to pull down into an area that makes sense in terms of where there was a major participant on either side kind of playing at. And that being a buyer and a massive buyer, one of the biggest buyers probably ever, and one of the bigger buyer imbalances that we've ever actually seen within Oxy on this weekly candle here in February of 2022, right? So obviously, whenever that's happening as a 3 lower low sell climax on the weekly chart into December OPEX, as well as with tech looking like they have crazy red flags, right? You guys go over to the MAGS ETF. Crazy extensions in the MAGS ETF. Crazy volume anomalies throughout the board, right? You're getting these choppy price action looks. It's almost as if this looks kind of like AMD whenever that started its preliminary distribution. Crazy volume anomalies into that January expiration, right? As you guys can see, they kind of started at the January OPEX, right? And then the volume anomalies just kept staying there, and then everything was absorbed throughout this range. One more breakout, boom, crazy liquidation from the highs, and now a major distribution is obviously played out, right? And if you guys go over to QQQ, you know, we're starting to get really disgusting looks. You go over to MAGS, really disgusting looks. You go over to your other ETFs like SQQQ, really disgusting looks. Everything about a lot of these charts is absolutely disgusting, right? I mean, we have volume anomalies on Tesla up here at the top of these trends. After a 3-day continuation into just really disgusting volume at the top of the trend that swept the previous day high and absolutely died on FOMC, lower highs, and now it's failing the previous all-time high level, right? So a lot of these names for the short time being are cooked, right? And that's obviously going to play a role into the other names like Oxy, and a few others, right? So another thing would be dealers are actually flipping long. Asset managers were short on XLE, and this one was, that data was actually getting a little bit more and more and more skewed as we kind of pulled into the bottom of this wick and swept that previous weekly wick, which is another nice little confluence for the sector fund itself, right? And you guys go over to some of these other energy names. They're looking like they could be in crazy shakeouts where they're reclaiming these previous weekly supports. And if they hold these relatively well throughout this week and next week, these could be even crazier of moves, right? I'm not saying that the move is exactly just going to go vertical from here on out, and you have to be very picky and choosy with what names you trade. But yeah, a lot of these names don't really look too bad, and they're performing relatively well. So yeah, that's that. Now we could go over into some other charts. So these are some of the charts that I haven't touched yet. Banks, this has been a beautiful short side vehicle that I've been talking about for a very long time. We have a big time gap in the sector ETF itself. This is a very low ATR sector ETF, right? So obviously with some sort of crazy gap that looks like this and absolutely no constructive higher lows that were able to collect liquidity in all of those leftover pending orders in this area. Obviously, we never got that opportunity. Buyers never got that opportunity. So obviously, if there were to be sellers, buyers from here that ended up becoming sellers from up here, then these things could start pulling back into that gap where buyers can see this as a little bit more of an attractive buy spot because they want to bid beneath where they previously bid, or they want to bid at where they bid previously, right? So we could actually see this virtually as a path of least resistance. I know it looks like a peg. I know people are so stern on what they see, and they just go by this super strict system, and that's totally okay. But context matters, guys. All of the context that I just talked about with just the general market matters. And once this thing started to obviously fail that staircase and started to fail putting in higher low by higher low, and it started to fail beneath the ranges, and it actually started to pull back into the gap on absolutely pure capitulation throughout that FOMC day, followed by these inside bars, and now basically failing the bottom of the gap area. Technically, that's the bottom of your gap. It leads me to believe that this could obviously recorrect its way a lot lower, right? You're getting tight, higher, low action on this trend line. And if things crack down a little bit more, it should just pull down into all the way into the bottom of the gap. But this was a really nice short side opportunity once you started to see it fail the staircase, once you started to see the really disgusting price action on the hourly throughout whenever we actually lost that level throughout this general range, right? And then right into that FOMC is whenever things just absolutely died, right? And there was a lot of volume and absolutely no buyer. This was actually one of the more weak sectors in that FOMC death candle that we had on SPY throughout most of the market, right? So yeah, really disgusting day for banks, and then the structure subsequently just never got any better, right? It would look a little bit better if you go over to XLF and you say, you know, this made a new low the next following day, and then it all got soaked up on heavy volume and it turned into like a high volume hammer candle. Like I would totally understand that, but a lot of these don't look good at all. So I've been shorting selectively on XLF just off of the top of the gap, right? I don't even know why I have this marked. The top of the gap's technically up here. Okay, so there's your top of the gap. There's your bottom of the gap down here. Very easy to see visually on the chart here. And there was absolutely no buyer, right? This was a little leg higher leading into the upper area of that FOMC candle as well as the gap. Throughout the holiday session, right, there was absolutely no participants in the market as a whole. So I hold a lot of this price action to just a grain of salt, right? And then we got another gap down, right? And then we're just holding higher lows, and we're holding on for dear life as buyers. And things don't really look too good here, right? We go over into some of these other names whenever things were cracking down. BLK is in a path of least resistance to the downside, right? We had a big time failed breakout. We had obviously a sell down. We had a pop, and then we had a disgusting drop today, actually, after we coiled off the bottom of the range, right? Demand was completely wiped off of the bottom of the range after 1, 2, 3, 4, 5, 6, 7 tests of the support with a failed breakout from the highs and then a subsequent lower high, right? That's basically a head and shoulders pattern that makes a lot of sense, right? And then you go over into some of these other names where they don't necessarily look too great, not too bad, not the best, not the worst. C has a decent look. It gotta basically hold this high, or nothing really looks too good here as well. And then you go over into some of these other names. What were the other ones that I didn't say? Yeah, this one never really looked too good. BLK has always looked terrible. Schwab looks like absolute ass, right? So, I mean, the general sector, guys, you could say what you want about it. You could pull up all the data you want. The price action, the charts, the structure, the volume, the everything. None of it really looks that good. It really doesn't. Okay, so yeah, like I said, say what you want about this thing. None of it really looks that great. Now, look at the energy sector. That's so funny. Look at the energy sector and look at tech. That's so funny. Anyway, so yeah, that has been my higher time frame reads. I talked about NVIDIA dispersion as far as like LRCX goes, as far as some of these other names go, because the context of these charts is crazy. And I've been talking about this one for a while. It's a 1, 2, 3 lower low accumulation into a huge retest followed by lower highs subsequently on top of that level. Now we're building out an internal path of least resistance off of that $80 psych, right, where they're just incrementally eating away at that $80 supply. Once they can obviously break through that area, we're in a major, disgustingly gross candle over here, right? So it's a little worry. It definitely worries me with this name. But if we can really coil up and press up against 80 or find an LPS potential within this gap, that could be a fantastic trade, right? And this name has actually not seen its true markup yet. A defense candle on that gap and then claim the top, maybe put in a higher low on top, or pop up into the top of the resistance, then drop one more time. That could be your LPS of your LPS, right? That could be your smaller time frame LPS. And then this thing could obviously start to move. But you just have a lot of these names that just have disgusting, disgusting, disgusting looks, right? So you want to be very, very, very careful with a lot of the things that you're doing, right? Tesla, it's also on the brink of failing. I already talked about that. Apple was in a very clear looking distribution pattern that's going on here. Microsoft's kind of in that environment that I talked about with hanging on for dear life off of higher lows on the weekly, right? There's so many disgusting looks, right? So, yeah, I don't know. That's just basically what my view on the market has been as of lately. Lulu was one more that I'm going to go over. The last name, discretionary, peg sweep, higher low potential, right? And it closed ever so slightly above. We sized into a lot of swings throughout this range and then obviously took them for about $45, 45 deltas on those contracts. So that was nice. Maybe 40 deltas. So 35 deltas, I would actually say. So yeah, that was a really, really, really nice trade. Like 90 something percent on March. So end of March. So that was really nice. But aside from that, guys, TSM was the last one that I'm going to talk about here real quick. So we had a major range that we were dealing with here. We talked about NVIDIA dispersion. This has been a crazy, crazy, crazy weekly level that has been trying to be absorbed throughout how many weekly candles, right? I mean, our first test into this high, once again, was in October of this year, right? And then we finally took clear control of it on this 2-week base on these 2 week inside bars that were both sitting here above that level, as well as developing higher lows after we obviously closed the peg. We had record high volume on this peg, so it's very notable for a higher time frame directional read right here on this volume, right? And then once we started to fill that, and then we started to get that 3 lower low look into a spring followed by a rip, and then that rip followed by a sell, that sell followed by higher lows. That's whenever we know structure is developing and buyers are getting a little bit more aggressive, right? So what did I obviously look at? You guys should be able to answer this in just 1 second. If you want to pause the video, you can. I saw a path of least resistance off of 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 trading days, 9 different trading days that we're testing this general area of like 205 up into 207, right? So whenever I see really nice volume popping up into that and a really healthy bull candle spread, followed by a diminishing sell side spread that takes us 4, 5, 6 days of trading action to just pop down into the progression of a 2-day bull move, off of a resistance that's been tested 9 times, right? And the seller action looks weak, the buyer action looks strong. We fill a gap, we hold it with a strong day, we close above on top of the gap. Then that leads me to believe that that's our LPS off of this low, right? So establish your risk off of somewhere within this gap, off of somewhere within this range, and then see if you could find the expansion into a new high, right? You could target this high, you could target whatever you really want to target, right? But I would just target and scale into the strength above the high. That's a very easy trade, right? And that's a size from 201 all the way up to the 220s, right? So that's a 21 delta move on a $200 stock. That's almost a 10% move you're catching on options that are on the underlying, right? 10% move on the underlying and catching that on options. I mean, I had some runners that did 400%, and then my further outswing did like 180% because I held it a little too long on this day, and it sold off a little bit off the open. But yeah, that just goes to show you guys how the dispersion kind of works in the market. I still think a lot of these semiconductors can perform relatively well in comparison to NVIDIA. Is it a safe bet to make, considering NVIDIA looks like clear distribution? Not necessarily. I think kind of looking into more of your passive sectors, the safe haven sectors could be a little bit more of a better thing to do. But yeah, that's just been my overall market breakdown. I just wanted to keep this to just charting, not necessarily all of that options exposure to the markets and how to really gather up a strong directional read with conviction based off of that data. I don't even really want to talk about that because it's not needed for a lot of people. I think if people just simply look at the charts, dial in on the charts, understand a little bit about seasonality, tie that into Wyckoff and the charts and volume and structure, then you will do really well, right? And you'll really avoid yourself from taking big losses, because I've always taught you guys, trade with discount, trade with the banks, trade with, where the big money is playing at in terms of where they have heavy intention at. They have heavy intention to sell whenever a lot of people are buying into the highs, because that's typically just how retail trader behavior is. And then they have a lot of intention to buy whenever a lot of, retail trader behavior is looking at selling. That, for example, over here, right? For example, when Pelosi sold her stake all the way back here on this area. So, yeah. That will be it. If you guys have any questions in the Discord, please let me know.